Hello, folks, and welcome to the NASDAQ market site, where we're very flattered to be able to film The Rebel's Edge with John Najarian and Marc LoPresti. Marc, I know we have a sponsor that is running a great special right now, so I wanted you to tell people about it before we dive into The Rebel's Edge.
Absolutely, John. Of course, is talking about Verijet. This is a company that the Rebel Nation that watches Rebel's Edge religiously, as I know you all do, is offering a chance to win a ride on a private plane. Who doesn't want to get a ride on a PJ, John, on a private jet?
Yeah, I love this jet.
It is a beautiful jet. You've heard John and I talk about it before, I'm sure. This opportunity, you have to share your worst travel nightmare. If you go to Verijet.com, you'll see a link where you can participate in this sweepstakes, share a few sentences about your worst travel experience, and you will be entered to win a chance to ride on the incredible Cirrus SF-50 Vision Jet. And you never know who you might meet on board, so check that out.
Right? That's Verijet.com, right, Marc?
That's right.
Verijet. All right, let's get started with the Macro Minute. Macro Minute, I'm going to say Janet Yellen, Marc, because Janet Yellen has been a little bit of everywhere, including, I guess, enjoying some psychedelic mushrooms.
Yeah, I heard something about that.
On the road. So she is saying that we're probably not going to see the same sort of CPI numbers going forward that we just saw.
Yeah, don't get too excited about what you saw last week, and of course, when Janet talks, we listen, just like in the E.F. Hutton days. I'm a little bit more interested, though, John, to be candid with you, in the Macro Minute about the retail sales data that we got today. They came in at 0.2% month over month. Street was looking for a full half basis point. That is actually a good thing from the perspective of Fed monetary policy and interest rate hikes, showing a decline in consumer spending, which, of course, I have been screaming about for months. And we're going to talk about that a little bit more when we talk about Bank of America earnings. So I won't tease too much, but we're going to cover that more later on in the show.
All right. Let's talk about fantastic futures.
Fantastic futures.
You always love that fantastic futures bit. Food commodity prices back down to 2021 levels. Now, when you and I were on the road talking about what was coming when Russia invaded Ukraine, we were talking about, hey, there's an awful lot of fertilizers that come out of that area of the world between Russia and Ukraine.
Oh, yeah.
And an awful lot of wheat and those crops. Well, those prices that shot up, Marc, are back down to 2021 levels. Of course, Russia invaded in 2022.
Right.
So the fact that they're back down here already is a good thing. But you know what? The consumer is not feeling it because all of the food manufacturers have kept prices high.
Yeah, well, I mean, unfortunately, that's one of the impacts of an inflationary environment like this. It's easy to bring prices up for manufacturers and retailers. It's harder for them to bring prices down for somewhat obvious reasons. But look, this is good. The UN Food Agency did report last week some of the lowest levels in 2 years, as you pointed out, in a variety of key components. I'm talking about sugar, vegetable oil, cereal, dairy products, wheat, corn, things of that nature. That will eventually spell good news for the consumer.
Yeah, well, let's dive into what the Bank of America earnings say about where the consumer is right now, because consumers are still spending, Marc. And Bank of America earnings, although not spectacular, were certainly more than enough to lift the stock several percent. So tell me about it.
Yeah, so far today. And of course, we're talking about Q2 earnings, so this is backward looking. I would have expected to seen less consumer spending behavior. A lot of what was represented in the upside in these Bank of America numbers were related to credit card spending. I think we are definitely going to see that continue to cool, not unlike the retail sales numbers that we talked about earlier, also showing cooling, slowing down in consumption by the American consumer as a result of contraction of credit and depletion in savings and all the then elevated prices and all the things we talk about. I was also interested, John, in Bank of America's numbers to see that they have an increasingly difficult problem with their securities portfolio, right? They had another $7 billion that they lost on those held to maturities, those securities we talked about so much during the banking crisis. And of course, they had a significant regulatory problem that they settled earlier in June, $150 million, I think, from the Office of the Control of the Currency for things like fake accounts. My God, did we learn nothing from Wells Fargo? And junk fees, slightly less controversial, still crappy for consumers.
Sure.
But why are these banks continuing to open these dummy accounts? I will never understand it.
Nope, nobody will, and very few of us are likely to forgive them for that either.
Absolutely.
How about Sunrun? So we had SunPower and Sunrun, two of the big solar plays, moving up double digits yesterday. Well, Sunrun continues that run today. They were up as much as 6. I think they're holding on to about a 4% gain here, Mark. Some analysts said that a lot of what they see in solar tells them that it's going to grow by at least 10% this year from here. And then maybe we soften a little bit next year and then ramp back up in 2025.
Yeah, and I was looking at this report and trying to sort of uncover some little nuggets of wisdom from there. It's somewhat unusual in my experience, John, that you would get a prognostication so near term. We're halfway through 2023, of course.
Sure.
And he's saying we still have 10% still to grow or room to run to the upside. This report bolstering not only Sunrun, but SunPower, Sonova, and a couple of the other big solar names. Interesting to see if this one turns out to be right. If you were long these stocks, take profits. I don't expect this bull run to last long.
All right. Well, how about this one? Speaking of bull runs not lasting, Massey, M-A-S-I. So basically, they cut their 2023 healthcare revenue outlook. The stock dropped double digits, Mark. And there's really nothing good in this order. They say, or in their report, large orders that were anticipated for the quarter, second quarter that is, were put off. So this plays more into what you've been saying as far as not just consumers, but corporations perhaps saying, you know what, I'm going to see exactly what we get out of the third quarter before I make that big purchase. And maybe you'll get that big order from me in the fourth quarter, but I'm going to put off a lot of that.
Yeah, this to me, John, is an interest rate story, not a healthcare story, right? This is essentially this company saying our large corporate customers are holding off. And why not hold off? If you believe, as we do, or at least as I do, that we're looking at 2 more 25 basis point hikes between now and the end of the year, and then rate cuts starting in Q1, if I'm looking at a significant $50 or $100 million purchase order that I'm going to finance with credit, which most of these guys do, of course, if I can wait until Q1 to save myself some significant cash on that, I'm going to do that.
Right.
So I think we're going to hear during this earnings season, which is off to a pretty good start, by the way, I think we're going to hear that story continue. Not a healthcare story, it's an interest rate story.
All right. Well, it makes all the sense in the world that just like when you buy a home, you'd rather buy it when rates are easing rather than when they're screaming higher. Makes a lot of sense.
Assuming there's supply, right? We're looking
supply.
at those numbers coming out this week too. On existing home sales, we're going to be looking to see if that historically low turnover on existing homes continues. I think it's going to continue. And we've got some other housing starts numbers as well still to come out this week.
Very true. All right. How about we already covered Bank America. What about Morgan Stanley? So Morgan Stanley, folks, the profits at Morgan Stanley dropped by 18% in the second quarter. That's a big drop. But they had record revenue, sales revenue, in their wealth management business, which is great for Morgan Stanley. And Goldman wishes they had those same numbers. So we'll have to see how David Solomon and the crew at Goldman does. But this one was pretty interesting, Mark.
Yeah, it was. And this is sort of a tale of how their business is comprised, right? Obviously, the investment banking and deal-related revenue, this was not a surprise, I think, to anybody. Anyone on Wall Street knows it's been rough out there in deal world, whether it's M&A or IPOs or the kinds of activities that Morgan Stanley generates substantial fees on the deal-making side. It is dead as a doornail these days on Wall Street as far as deal-making is concerned. We look forward to that coming back, as do our friends here at the NASDAQ, I'm sure. And I think the wealth management side of the business, which is very substantial for Morgan Stanley, I think more than half of their revenue comes from wealth management. I would attribute that to inflows that we saw from the regional banks, right, coming over to companies like Morgan Stanley Wealth Platform, one of the better platforms in the business. My belief, John, is that was the benefit of those inflows from the regionals going into going into Morgan Stanley, and probably going into longer term treasury type stuff, and that's what we saw happen in the second quarter.
All right. Well, NFL. In Pete's sports clips, as we like to call them, we talked about the running backs in particular, and obviously Shaquan Barkley, Shaquan, but we call him Shaquad because the dude's got some massive thighs, and he puts them to good use during the season. But he and the Giants, Mark, couldn't come to a deal. So instead, he has to take the franchise tag. Now, that undervalues him pretty substantially because it's based on, I think, the top 3 from a year ago that you get as far as your signing. But the new numbers that these running backs are getting dwarf his. So he's not going to be a very happy camper, but he certainly is undervalued. And Pete says he is very much going to be one of the people that they count on into the playoffs.
Yeah, it seems that way. And a similar story with Josh Jacobs, right? And based on the numbers that I was looking at, they're going to wind up with half, in some instances less than half, of what they could have gotten by taking what's behind door number 1 versus
if
what's
they had
behind
that
door
choice.
number 2. Yeah,
right?
Absolutely. With a significant $10 million plus bonuses and things of that nature. So it's going to be interesting to see how these plays out. I think Pete's overall point that these guys are undervalued generally, given the role of running back in modern football, is a good. I agree with that completely.
But, yeah, and a lot of the linebackers are much lighter weight, fast, so they can cover receivers and things like that. But it makes it a lot tougher for them to have to deal with a big guard coming right at them.
Yeah.
So the NFL sort of goes back and forth like this. If you get really big thumping linebackers that can stop the run, you end up getting a lot more passing. And yet, even though the rules favor passing, when you have smaller linebackers that can cover the pass, you're going to have big running backs pounding at these smaller linebackers. That's one of Pete's big points.
Could make for more exciting football.
Oh, yeah. I like that it goes back and forth. Now, let's talk a little bit about Ohtani. Obviously, the fabulous pitcher and home run hitting pitcher over at with the California Angels. Just a phenomenal player. 2.5 years, he has been lighting it up. Unprecedented what he's been able to do. I mean, you have to really go back to Babe Ruth and say, yeah, the Babe used to be a pitcher too, and he could hit some home runs. But this guy, Mark, he just hit his 35th home run of the year. It was a 400-plus foot shot to straightaway center.
Unbelievable.
Yeah, this guy's playing on a whole other level.
Where is he from? Is he another kid from the Dominican Republic? From Japan.
Dominican Republic. I like that one.
I don't know what they're putting in the water down there, but they are just making some unbelievable baseball players. We talked, of course, about my soon-to-be friend Ellie De La Cruz. I'm flying to Cincinnati tomorrow to watch them play, hopefully to get to meet Ellie. I'm looking forward to that.
In the owner's box, you had to rub that in,
I didn't say, you brought that up, John. I didn't bring that up. I think it's work. It's research. I need to improve my sportscasting ability for the Rebels Edge viewers. I do. Folks, I know it's not my strongest. I'm much better with stocks, futures, and options in sports, but I'm working on it. And if I have to be the guy to go to that game and sit in the owner's box, John, damn it, I'm going to do it for the benefit of the show.
Yeah, and
sacrifices.
Basically struggle through the game with Jack Wyatt, one of the principal owners of the Reds. I'm sure you're going to have a good time.
I won't tell you how I'm getting there, Ticket. That's just going to piss you off even more.
Yeah, I don't want to know. I have a feeling it's a private of some sort. All right. Well, folks, we appreciate all of you joining us. We will be back tomorrow, 1 p.m. Eastern Time. Unfortunately, we won't have this beautiful backdrop tomorrow, but we will be back. We love doing these at the NASDAQ. Please let us know what you think and join us tomorrow, 1 p.m. Eastern Time.